Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Today we saw an amazing performance from GameStop, AMC and Bed Bath & Beyond. The stocks had a massive run-up early in the day, but as time passed, the price action weakened significantly. As we all knew, we were bound to get pulled back eventually. I still think there is a decent chance that tomorrow we can see another run-up because of options, but I have no doubt that big money is working hard to effectively push us back down. The great takeaway from moments like this is watching the different investor communities all hyped up. We are dragged through dirt and mud for months on end, so in these brief moments, we get to breathe and get up again and feel a small glimpse of what is to come. There was evidence suggesting that a couple groups began getting margin calls because of the run-up in price action on meme stocks, but as I told people, this is not a big deal. It is not unheard for financial institutions to get margin called, and it does not necessarily mean they are about to begin covering short positions. It just means they need to deposit more funds, which, as you know by now, they have almost infinite amounts. It was cool to watch it, but I doubt it will have any significant effect down the road. Not a lot has happened today in terms of news from these respective companies, but we do have important information to talk about regarding the general stock market, and since meme stocks have been trailing the general market movements, I find it important to talk about it. First, forecast for the Consumer Price Index figures for the month of July came out. The general notion right now is that the inflation is forecast to move lower to 8.9%, which is a bit lower than the 9.1% that we got in June. A CPI reading above 9% has the chance to allow the Fed to remain hawkish or even take a greater hawkish stance in their policymaking. A lower reading than 8.9% could result in the markets becoming a bit more bullish, with many economists and analysts validating their beliefs that we already reached peak inflation, and we could see the stock market rally up. The S&P 500 along with Nasdaq dipped today after Nvidia announced a weaker than expected revenue for the second quarter. Shares for the chip giant as well as AMC and Broadcom also declined as a result of the bearish news. This was interesting to see, given that the last job report eased a lot of the fears regarding recession. U.S. long-term Treasury yields fell on Monday as key inversion of the bond curve continued to deepen. The benchmark 10-year Treasury notes yield fell nearly 7 basis points while the 30-year Treasury bond yield was down 6 basis points. The 2-year Treasury yield only fell 3 basis points. Back to meme stock news, it is hard to decipher what exactly is driving up AMC, GameStop and Bed Bath & Beyond. Wall Street Bets forums have been noted to show that the mention for all these tickers surged significantly over the weekend, which in my opinion is why the stocks moved up so erratically in the morning. I find a lot of comfort in seeing how well these stocks managed to retain their gains. Though they fell in value after that morning run, they still managed to end the day holding a lot of the support. Last thing I want to talk about is housing. I told you guys last week, I am filled with tons of updates and stories on housing. I am loaded up like Mia Khalifa. As you guys know, we have talked to the edge of the universe about how Wall Street bankers have been buying up the important housing in America to turn people into forever renters. Well, new research suggests that a lot of the housing that Wall Street has been gobbling up has actually not had the return on investment they anticipated. In fact, Wall Street is losing billions of dollars in the market. You see, their algorithms, which dictate which zones to buy the housing supply, is limited in the variables it needs to consider. Many cities and states have actually begun to increase the supply of the available housing, which the private equity algorithms did not account for. As such, when Wall Street came in to buy the housing and invested billions of dollars buying cash up front, now a lot of that money is seen as wasted. With more supply comes the problem that people can go and buy more housing, not being forced to become renters. As such, Wall Street is having difficulty finding people to rent and have instead had to begin selling many of the housing supply they bought at significantly lower prices than that which they spent, ending with billions and billions of dollars lost. The housing market has been running rampant, but it is due a huge break soon enough. Though everyone has a different opinion as to what the prices for housing will be in coming years, do not make the mistake that just because some of these private equity institutions are losing money means that they are reconsidering their plans. Zillow foresees a 7.8% house price growth over the coming 12 months. They predict over the coming year, 741 markets will see house price growth of 5% or greater, and because of that, they are going to become more aggressive in their purchases along with other groups who too use their research to plan out their investing strategies. I do have to note that there are differing opinions. Moody's Analytics chief forecasts that the U.S. housing price will remain unchanged and that on a regional level, they foresee half the nation experiencing falling home prices. Among the 414 largest housing markets, they predict that only 204 regional housing markets will see rising home prices. In my opinion, when I take a look at these contrasting opinions on the future of the housing market, it brings me back to my main thesis on investor approach, which is grounded in psychology. There are those that believe that investor psychology has become so bullish that any dip in price will quickly be bought out, keeping the upward trend we have seen true in the future. Others that aren't as bullish, such as Moody in this case, tend to look at things from a more cyclical approach. They see that markets have overstayed their bullish rally too long and that a pullback is imminent. Investors might be bullish, but that does not discredit the evidence that suggests prices for housing and even stocks is due a correction. In the end, only time will tell. I personally tilt more with Moody's opinion, though I do not see my stance as overly bearish. I do too recognize the significant psychological shift in investors need to want to secure and buy as much as possible since the supply is limited. I think we will see plenty of bull rallies in a bear market, more than we have ever seen before. It's great to see some states and cities recognize the main problem and allow for development of housing supply. Remember, we live in an age where we are seeing America sort of consolidate around the biggest cities. This is most likely due to job security among other factors. The housing supply in many of these cities is limited because the demand is so great. Wall Street has been taking advantage by buying up politicians that will slow or neglect the needs to evolve in order for them to make the big bucks. Their parasitic style of making money is not talented, but rather derived from the need to create problems in society so they can leverage a solution at a high expense from you. Today was an amazing day to me, an investor in any meme stock. Come check out my Discord. All of our day trade alerts were amazing today, we made really good money. We have something for everyone there, link will be in the description. I plan on making at least one more video this week, so stay tuned for that. I never abandoned you guys, I love making these videos, it's just my schedule has been tight, but now that I am finding some time, you might see me pump more content consistently. I am with you guys to the end. I continue to buy stocks and provide proof on my Twitter all the time so you guys can see I am true to my word and do what I preach. Let me know if there is anything in particular you would like me to discuss in the next video and I will consider making a segment out of it. Until the next video, I wish you guys the absolute best. Be kind to each other. Remember, we are all humans and that though we differ in opinions, we all want the betterment of each other in the end. Remember to come check out my Discord, super cool vibes there with over 8,000 members. Hope to see you on the next one and to the moon.